What an amazing run by Bitcoin in the last week or two. And look at this, Bitcoin, it seems, has decoupled from the rest of the financial markets. The only thing that is remotely coming close to the performance of Bitcoin is gold. And you look at the S&P 500, the NASDAQ, everything else has been diving. So has maturity finally come to Bitcoin to mature as an asset that is comparable to gold or digital gold that protects you and takes off in times of turbulence and crisis? This is Pablo He-Man. We're going to look into this phenomenon. So if you have been following me on social media or on Twitter, I have been posting this chart where I took, see the orange line, that's a fractal or a price pattern from 2021. It was, to be precise, it was July 2021 when basically when Bitcoin was around 28.5K. And everyone, including myself, thought Bitcoin is going to go to 20K, but instead of doing that, it basically bounced and went from 28.5 to about 51K, pulls back to 40, and then bounces back up to 69K, and that was the ultimate top. So I thought, it looks to me a similar sort of fake out bounce is again happening to us, because when everyone was expecting Bitcoin at 15.4K to go down to 12, it instead bounced. So I fitted this pattern, this fractal over the current Bitcoin price action, and people in my Discord and on Twitter have seen this play out. So basically it made a perfect stop around this 19.8K area, and then boom, now we're almost there. The top of this fractal would be around that's 31.5K. So that's a minimum target to keep in mind for Bitcoin to hit. Although of course it can pull back to 25.5, 25.1, something like that, and then bounce up. And once again, folks, this is Pablo He-Man coming to you from Treasure Island. So as usual, this video goes out to my Discord for a couple of days first, and then I put it out publicly for everyone to view. So without further ado, let's dive straight into it and see if Bitcoin has indeed finally become the safe haven that it promises to be. And also, as you know, I have been saying for a while now that Bitcoin is actually forming this head, shoulder, head pattern. So basically it's an inverse. Shoulder here, head, and shoulder, and it's a smaller shoulder that see, this shoulder took like a few months to form on the left hand side. On the right hand side, it's going to be a shorter one, and basically, nevertheless, usually when it's shorter and then breaks up, then it means it's stronger, because it doesn't take as much time to form the right shoulder. And this 25K area here, that's the neckline, and we've just had a weekly close with a massive punch through this neckline. It is, of course, looking very bullish. Okay, but inverse head and shoulders usually, or head and shoulders, can give you a price projection. Using the inverse head and shoulders, where can we think Bitcoin is heading with price projection? Now, so the head of Bitcoin inverse is at 15.4K. That was the low, and the neckline we saw was at 25K. So that gives us about a 9.6K in height. So basically we see that here's 15.4K bottom and 25K neckline, giving us a 9.4K in height of the head. If we take that and we add it onto the point of breakout, which is 25K here, right? 9.6K, sorry, would give us about 34.6K. So that would be higher. That would be around here somewhere, right? About 2 or 3K higher than this price fractal is indicating. And going forward, do we think that going forward Bitcoin is going to be the savior? Basically, everything's tanking, banks are crashing, maybe NASDAQ's bouncing a little bit, and Bitcoin, as is finally promised, has become this golden vessel that's going to rescue us from hyperinflation, that's going to rescue the world, the digital gold that we can pile our savings and our money into as a store of value when the world is crashing. Is it? Because that's what everyone is saying right now. Well, I just have a little bit of question for those people who are saying that, because I'd like to take you back to earlier last week when the whole banking crisis was crashing and Silicon Valley Bank was crashing. And remember, USDC became depegged. Remember how USDC was always equal to $1, the stable coin, and yet USDC became only 0.88 cents on the dollar. Remember that day? Okay, to answer that question, has digital gold, which is Bitcoin, become gold, which is gold that's going over was $2,000 right now per ounce. That's compared to the day when the crisis happened. So this, we all remember, is when USDC crashed to 0.85, and that happened on the 11th of March. So what does a real safe haven do? Gold. So this is obviously price of gold, right? We see it's pretty much at $2,000 now. So gold, for example, bottom on what? Wednesday, the 8th of March. Can you see that at the bottom? Wednesday, 8th of March. So basically, when this is the 9th, 9th, 10th. And by the time, USDC was crashing because Silicon Valley Bank was crashing, gold didn't skip a beat. Gold was still like just rising and rising when the crisis was hitting. When the crisis was hitting, gold bottomed 3 days ago on Wednesday and just kept on shooting up. And now let's compare that to Bitcoin. So Bitcoin didn't bottom, and we should remember this, at 19.5K until Friday, the 10th of March. And basically made another wick down to below 20K the next day on the 11th of March. So basically, there you have it. Think what that means. Because it's easy to listen to all the talking heads on social media and think, oh, Bitcoin has become digital gold. But look what happens in a real crisis, right? You had Silicon Valley going down over the weekend. And basically that meant USDC, or Circle, has lost like 3%, 5% of its deposits, or so we thought. And therefore, Circle or USDC wasn't going to be $1 to $1 back. It was more like 88 cents on the dollar. And yet gold had been seeing this crisis coming 3 days ago, just started shooting up, right? That's what store of value is. Bitcoin couldn't even stand Silicon Valley Bank going down because it thought, oh, okay, well, all this USDC money is stuck there. No one has USDC anymore. USDC might go down to 88 cents on the dollar, so therefore no one's going to buy Bitcoin. So Bitcoin completely freaked out and crashed to like 19.5K. Instead of say, if Bitcoin is sort of like digital gold, then what it should have done is behave the same way as gold did, which is basically stop falling around, say around 21.5K, 22K by Wednesday, by the 8th of March, and start rallying. When there's a crisis, people buy gold. When there's a crisis, when there's war, when banks are collapsing, people don't trust the banks anymore. People buy gold, people buy Bitcoin. That's what it's supposed to be. So Bitcoin was supposed to bottom on the 8th of March, same time as gold, and start shooting up to the moon. It didn't. It couldn't even survive Silicon Valley Bank crashing. So think about this. If say in the next 2 weeks or 3 weeks or 3 months, we have another GFC, because Credit Suisse is pretty big. It's as big as Lehman Brothers. If Credit Suisse collapses, we could have another Lehman Brothers moment. Potentially. I'm not thinking it will happen, but it could potentially happen. And when that happens, how many banks do you think will go down? When banks go down, what do you think is going to happen to USDC and USDT? Because Tether and Circle store a lot of their money, bank a lot of their money with a lot of these smaller banks, or even big banks like Credit Suisse. Who knows? Maybe Tether is keeping their money in Credit Suisse. If that happens, gold will keep on shooting up. But yet, when we find out USDC and USDT are not 100% back again, Bitcoin's going to crash again? How is that digital gold? So I am bullish on Bitcoin for the next few weeks, but think about it. It's not digital gold, is it?